Hello friends, in the series on the income tax cases, today we will discuss a very important case on the applicability of section 69A and section 115 BBE. The purpose of discussing this case is that whether the learned assessing officer has the power to recharacterize the income shown by the assessee into a different head without doubting or without disputing the nature of the income which the assessee has shown. The name of the case is Deputy Commissioner of Income Tax versus Tapesh Tyagi. The case has been reported in 108 ITAT Tribunal, short notes 12. The matter has been decided by Delhi ITAT H bench and the date of the judgment is 27th October 2023. In the present case, a search was conducted on the assessee, some loose papers were found, and the assessee has surrendered some income into the head business income, and accordingly the assessee filed the return of income. Whatever the return the assessee has filed and whatever the income the assessee has shown into the income tax return, the learned assessing officer didn't doubt about that quantum of the income and even the nature of the income, because the assessee has shown that income into the business income and the assessing officer has not created any doubt or dispute about the nature of that income, that is the business income. But while passing the assessment order, the learned assessing officer recharacterized the income shown by the assessee under section 69A as unexplained money. And even at that stage, the assessing officer did not apply the higher rate of section 115 BBE in the computation of tax under section 156. Later on, the assessing officer realized that because the assessing officer has applied section 69A, so he issued a notice under section 154 to the assessee for doing rectification and applying the higher rate of income tax under section 115 BBE, and accordingly the assessing officer applied the higher rate of tax, meaning thereby that the liability of the assessee increased from normal rates to the higher rate which are there in section 115 BBE, that comes to near about 78%. Assessee filed the appeal before the CIT appeal. When the matter was before the CIT appeal said that since the income which has been surrendered by the assessee is a business income and the assessing officer has not doubted and disputed the nature of the income, so applying the rate of section 69A and section 115 BBE is not justified. The department preferred the appeal before the ITAT. ITAT said that there are two conditions under section 69A. First condition for applying section 69A is that the assessee files his income tax return and shows into his income tax return the income under the head section 68 or 69 family. And if the assessee suo motu does not go for showing his income under section 68 and 69 family, then when the assessing officer is doing the assessment, then he can tax some income under section 68 and 69 family depending upon the conditions which have been fulfilled. But these sections do not give the power to the assessing officer to recharacterize the nature of the income which has been shown by the assessee without doubting the nature of the income which has been shown by the assessee. For example, in this case, the assessee has shown business income. The assessing officer has not doubted that income, that income is business income or not. But without creating any dispute, the assessing officer changed and recharacterized the income under section 69A and applied the rate under section 115 BBE. So ITAT held that the assessing officer cannot do so, and whatever the Higher rate of tax has been applied by the assessing officer under section 115 BBE was deleted by the Honorable ITAT. Friends, this case is very important. The crux of the case is that whenever there is survey, search and some undisclosed income is found by the department, then the assessee should try to make a very clear picture that this income relates to some source of income which should be satisfactorily explained by the assessee, which in most of the cases is related to the business income. So if you explain the source, then the department does not go for and cannot go for section 69 or 68 family and cannot apply higher rate of tax. At the end of this video, once again I am repeating the name of the case. The name of the case is Deputy Commissioner of Income Tax versus Tapesh Tyagi. The date of the judgment is 27th October 2023 and the case has been reported in 108 ITR Tribunal short notes page number 12. The matter has been decided by Delhi ITAT H bench. Thank you friends.